morning, and here are your top 5 stocks to watch out for in trade. Well, there's a whole host of numbers, so we'll begin with Jubilant Life that came out with its quarterly earnings where the profits dropped nearly 52% on a year-on-year basis to come in at 88 crore versus 185 crore rupees. You had the revenues which were lower by 13% on a yearly basis to 1,893 crores versus 2,182 crores. Margins as well shrunk to about 16.4% versus 20.4% on a year-on-year basis. The management did acknowledge that during the quarter, the employees did work to try and implement all of the safety conditions and serve their global customers by maintaining all of their operations. But barring the unforeseen circumstances, the company expects a strong performance in their pharma, life sciences ingredients and drug discovery development solutions businesses for the remaining 3 quarters of FY21. The pharma revenue was at 1,096 crore rupees. You had the LSI revenue at 736 versus 805 crores. Meantime, Reliance Industries in focus. Bank of America SEC says a buy rating with a target price of 23.55. They believe that RIL will monetize the existing investments across different formats. They find the risk reward as well favorable for Reliance Industries from a 12-month perspective and say that RIL is also looking to leverage the user's digital footprint. Meantime, JP Morgan has a neutral rating with a target price at 1860. They say the news flow of Reliance retail stake sale is a big positive. The reported valuation of $57 billion is underwhelming, and they believe that the retail stake sale is well discounted in the stock price. Overall, JP Morgan says that the stake sale would add further to the balance sheet flexibility. Meantime, NALCO as well came out with its earnings where revenue from operations came in lower at 1,380 crores versus 2,084 crore rupees. Profits as well dwindled to 16 crores versus 97 crore rupees, with the EBITDA at 129 crores versus 214 crores. Margins for NALCO as well were lower at 9.3% versus 10.2%. They did acknowledge that the outbreak of the COVID globally impacted the business as well as economic activities in general. Moving on then, you had Repco Home Finance as well that came out with its earnings. The calculated NII stood flat at 125 crores versus 121 crores. PAT at 64 crore rupees and provisions at 22 crores versus 40 crores year on year. They also approved raising of funds via NCDs worth 4,000 crore rupees. You also have ITC that was in focus as the company said that the board has approved the amalgamation of Sunrise Foods, Hobbits International and Sunrise Shitagra with the company. Do remember on the 27th of July, ITC had announced the acquisition of Sunrise Foods in an all-cash deal for 2,150 crore rupees. And remember, that engages primarily in the business of spices and will help the portfolio in that segment where it already has the presence with respect to Ashirwad. So that is the latest with respect to ITC's new restructuring.